Bobby and I are both Bitcoin enthusiasts, or we are Bitcoin like weekend enthusiasts.
I would say Bitcoin supporters at present.
We're Bitcoin supporters at present, and we have what I thought was a small Bitcoin position because I amassed it several years ago, and now all of a sudden it's not so small anymore as Bitcoin hovers around, 63,000. But anyway, one of the reasons we're looking at Bitcoin because I'm personally excited about a new product CME just launched, which is the Bitcoin Friday futures contract. And Bobby, I want your opinion on this before we analyze Bitcoin real quick. This is going to be a weekly contract. Great. At any one given time, there's going to be two. So each one, when it's launched, has 2 weeks and 1 day in it. So for one day, Thursday to Friday, there'll be 3 available, but then most of the time there'll be 2 available, the next Friday and the Friday after that. But that's not what I like about it. What I really like about it is that I think the first contract was 5 Bitcoin per contract. Well, obviously that prices out most of the retail trader. Then they went to 1/10, much better step. Now this is 1/50. This is so retail traders can, the capital efficiency of it and the way to be able to learn how to trade, hedge risk in Bitcoin without risking your entire cash supply, to me, is a big thing. Bobby, what are your thoughts on the product?
Yeah, like you mentioned, that first contract's about $310,000 per contract right now in terms of the notional value.
Right.
One of the things I like about this, and one of the reasons that the contract actually exists, is what happens with futures contracts, if you've been looking at them as long as really the 3 of us have. You have contracts that are pretty far off the asset that they settle to, the underlying asset, right? And that's because they're futures, right? They're where the futures market thinks they're going to be in the future. And as you get nearer and nearer to expiration, they converge in their price. They come together closer to the actual price till the day comes that they expire. With only 2 weeks to expiration, this futures contract is going to look much more like the index that it settles to for the period of time that it's in existence. So people can kind of take out the where's Bitcoin going to be 2 months from now, 3 months from now, and actually be able to dial in hedges and even speculative trades with a lot more accuracy versus the cash contract. I think that's groundbreaking. And because it's so small, the retail trader can do that, which is something the CME Group has focused a lot on lately. The CME's really turned a corner on creating products and launching products that retail traders can actually A, understand, and B, trade frequently.
And by the way, I'll add too that it's called BFF, the Bitcoin Friday Futures. Their most successful first day launch ever. 31,000 contracts traded in the crypto product. Most successful crypto launch ever. You know we love the CME. We've worked the CME a long, long time. We're not pitching this for them. We're pitching this for you just because I think this is a product that's going to fit into your risk management style a lot better. Before we go to the chart, any last words on it, Bob?
Yeah, because you and I talk about active trading, right? We do talk about investment themes depending on who the guest is, but we're talking about active trading a lot. And when you've got something that's a futures contract where you don't have to put all that capital outlay, you can actually use margin to your advantage. A lot of people think that futures contracts, the margin allocation that futures allow you is dangerous. And it is if you use it irresponsibly. But if you actually trade within the context of your investable capital and you use margin correctly, it becomes much more valuable for a contract like this. And it becomes easier again to understand for the retail trader. So I really like this contract.